Welcome to Invest. We're talking about investing, finance, and professional development. So current time of 10:38 a.m. on the Eastern Time on Jan 1st on Sunday. Today is the first day of 2023. I mean, for those that are on the East Coast, obviously in the US. With respect to Ethereum, $100,195, that's about 0.04% so far. On a technical perspective, the technical analysis has not really changed, based on our discussion yesterday. It seems like we have not really moved the needle much. We have literally moved by 30 something cents in the last, I would say, the whole entire day so far. So nothing really worth our time to kind of revisit and type of regurgitate the analysis that we've done already. But with respect to the news front, seems like there are some other macro seismic news that we should be anticipating coming up, right? Just to revisit the factors that we talked about in our recent video, what are the things that we need to look out for Q1, right? One is the CPI FOMC meeting, right? We understand that based on the historical Fed's meeting, we have had basically 4 rate hikes so far, right? 75 basis points the first one, second one is a 75 basis point as well, third one the same thing, and then 50 basis point. And what's the next one that we should be getting coming up in Jan, and what's going to be happening in Feb, right? And the reason is critical because that sets a momentum for us as we are proceeding with 2023. Obviously, we've heard from Goldman Sachs, from JP Morgan, even from the Fed himself, Jerome Powell, that an aggressive type of volatility dynamics that we should be expecting coming up can be impossibility, which, with higher rate hikes that we're going to be proceeding with, might just kind of push us against the wall to the level of Armageddon, or AKA recession, which I know they keep saying that, in a foreshadow perspective, that we are shifting onto, recession. But I personally believe that, based on the sell-off that we've been having so far, we've been in the recessions for over a year and a half already, and even 2 years if you really capture the, ever since the slide off from the COVID situation that broke out, the war that happened, and then subsequent to, just lingering factor of the repercussion that we've gotten from, the quantitative easing plan that we've had earlier 2 years ago to now, us collectively having to pay for this via these rate hikes to now push the overall market back down into the recession. So it's been very much like up and then like a valley, and now we try to go up. But obviously, these are more just bear market rally. And now you've seen the full effects being baked in. But at the same time, the Feds have not been, reactionary. They've been quite, relatively just taking it day by day. There's lack of tactics. There's a lack of proactiveness. We've just been kind of reacting to how, we are responding, right? And the corporate companies are in the mercies of how the Feds are acting. And we, as institutional and retail investors, are also at the mercies of reacting as well, right? And everything is kind of pointing back into the source of the lack thereof in terms of strategy from the Feds, right? So if we set a negative momentum in the beginning, it will just it's almost like you're starting a race, right? You get hit by a rock in the beginning of your race, and you have a bruised knee or bruised ankle. How's that gonna help you sustain that marathon or that sprint going forward? It will be dampened, right? So that's one. The next one that we should be cautious about is with respect to the tax season, right? Tax is one of the most expensive things people have to pay, even though we don't really think about it that way. So what is the treatment that we're going to be doing this year? I know a lot of people have been in the red territory in the portfolio. Some investors might take the precautious approach by selling their holding to kind of use as a write-off, right? rather than just keep holding on because of lack of faith and lack of confidence in the market rebound, that we might have to be more in liquid going forward. So that doesn't help with the case. So they might just take a write off. But how many people and how many investors, and in terms of the amount on the write off, will bake into the reflections of the market for Q1? That's something we don't know, right? So that's the second factor. Third factor would be more directly correlated to crypto, right? We know that the debacle from FTX, we know that the debacle from just lack of regulatory infrastructure that's in place right now, the lack of confidence that corporate investors, many of them looks quite stupid right now with the lack of due diligence that they were seemingly performed for the FTX transaction before, fueling a lot of money, like billions of dollars, and now getting wiped off because of the scam, right? But because of the amount of institutional backing that FTX had, it's kind of pointing the needle back into the institutional investors. So now they're looking stupid. So every step of the way going forward, they're gonna be extra guarded. They're gonna be more buttoned up, and corporate companies are already known for moving on the glacier pace. So is alongside of the Feds, the government side, um, and at the same time regaining the trust. It's gonna take time, right? It's almost like you cheated or you lied to your best friend or your girlfriend or your boyfriend, your husband, whatever, someone that's meaningful. You're not just gonna forgive them right away, right? You're gonna take time based on action, based on progression, based on rebuilding, cultivating relationship to get it back to where you were before. So that's another factor. You could see that with respect to the news today. It seems like we are seeing more black swan news that's kind of percolating right now. On the news front on CNBC this morning, on Jan 1st, Sunday, you could see that there's a highly invasive Omicron variant that's quickly becoming dominant in US and is doubling weekly. It seems like a lockdown might be in sight if we don't contain it well. Obviously this Omicron variant it keeps like evolving, right? It's like the BA1, subsequently there's like a BA2 or something, and now it seems like there's another variants that's popping in our face again. And so is with respect to the COVID surge in China as well, which as the fourth factor that. So this is the fourth, and now this is the fifth factor that we want to talk about, is with respect to the supply chain logistics issue in China. We understand that a lot of auto companies and tech companies are gonna have February kind of basically half off due to the Chinese holiday season in China, and China is kind of like the center of the logistics and supply chain circulatory system of the world. So we understand that it's going to be a slowdown because many Chinese people are going to be celebrating, but also with the COVID situation. So it might be a double whammy onto the foreshadow type of market dynamics in a supply and demand perspective going forward. So that's something that we should also be cautious about. And then the sixth factor would be corporate earnings, right? Which is something we know already. How are the companies on a tech perspective, but also in the industrial perspective, supply chain perspective, EV perspective, all of these, and crypto perspective, obviously, as our channel is focusing on, is gonna be performing going forward, by under the mercies of the Feds altogether, right? At the end of the day. And then I guess after the sixth factor that we have, the seventh factor might be just any additional black swan news that we might get, right? A lot of negativity so far. But with respect to the Ukraine-Russian war that we're still in the mid of it, we try to solve it, right? We try to, contain it, but is World War III happening because of some of the political dynamics that we've been seeing? And I'm not being superstitious or anything, but there is this clairvoyant and she's a blind lady from Turkey. And I read some article, and might not be it might not be true, because again, these could be made up article, but it seems like there's this lady who's blind, but she has been predicting a list of historical events that will be happening in the near future. And one of the factor that she did mention in her premonition or predictions, if you may, on how the history is going to play out going forward, is that 2023 might be the beginning of World War III. And she did say something around the fact, on around the Ukraine Russian region of being the first catalyst on propelling this into more of a global affair going forward. I'm not sure if that's, has any, it's ultimately the premonition is nothing really scientifically backed, but based on her prediction, I guess her track record of predictions, many has came true. Anyways, I'll look out for the article, and if I find it, I'll share it with you guys. But it's quite interesting. The timing is definitely, I wouldn't be surprised if that was the case. Let's just put it that way, right? And so yeah, so those are like the 6 factors plus one my add on, which is the black swan that we never really can really understand and gauge, because again, these are called black swan for a reason. But a lot of moving pieces, quite choppy in the market dynamics. But as long as we understand the marching order going forward, as long as we understand how we should play the technicals, and and I think, studying the technical analysis chart that we have on a day-to-day basis that I give out on my Patreon will be instrumental to your success, right? Because it gives you a good level of framework and infrastructure, and a logical mindset, rather than just like playing to your emotions, which most people would be, right? So appreciate you. Have a good rest of the first day of the year, and I will check you on the next one. And let me know if you have any questions. Take care.